I would increase my allocation to cash. I'll stick with cash, but let me kind of put that in a context. The most powerful investment tool we have is diversification. Problem is people don't understand what diversification means. So I run into people all the time. They say, well, I'm completely diversified. I own 50 different stocks in 10 different sectors, semiconductors, consumer non-durables, minerals, et cetera. And I say, you're not diversified. You may own 50 stocks in 10 sectors, but you have one asset class, stocks, which are subject to conditional correlation. In calm markets, they're idiosyncratic, but in panics, they all go down together, or in bubbles, they all go up together. So you're not diversified. So what is diversification? Diversification is having slices of asset classes that are minimally correlated. There's probably not zero, but as close to zero as you can get. So what would that be? You'd have a slice of gold, but I recommend 10%. I have some strong views on gold, and I've written a lot about it, but people are surprised to hear me say 10%. Like, oh, Jim, why isn't it 50% or 100% if you believe all this? Well, I do believe it. I wouldn't say it if I didn't, but you don't want to be 100% in anything. You don't want to be 50% in anything. 10% is fine. If I'm wrong, you won't get hurt. And if I'm right, you're going to make so much money that it'll actually kind of be the insurance on the rest of your portfolio. But that leaves 90%. So I would have a large slug in cash, maybe 30%. And people say, well, wait a second. Banks pay me 25 basis points. Stock market's going up. Why would I want to be in cash? That's horrible. A couple of things. Number one, the stock market might not always go up. Cash is the opposite of leverage. So leverage increases the volatility of the rest of the portfolio. You'll get much bigger returns, but you'll have much bigger losses. If you have a slice of cash and you've got a volatile asset over here, which are stocks, and another volatile asset over here, gold's fairly volatile. If you got that volatility and you have cash, it will reduce the overall volatility so you can sleep better at night. Cash is a great asset in deflation. And if you're talking about inflation, which is here, then you got to deal with that. But don't rule out deflation. If we go into a recession because the Fed over tightens, or, the thing about the inflation, just a quick side, it comes in two flavors. There's cost push and demand pull. Demand pull is when individuals are worried about inflation and they start accelerating purchases, like, hey, I better go buy that washing machine right now because the price is going up, or better go buy that house right now because the price is going up. That's demand pull. Cost push comes from the supply side, not the demand side. And that's what we're seeing because of what we talked about, supply chain, energy cost. The Fed can't drill for oil. Raising interest rates doesn't get you more oil or natural gas. So the Fed can't do anything about it except kill the economy. Yeah, and that'll cool it off. But when you pay, I put gas in my car. I don't just read about this stuff. It used to be $45. Now it's about $75. Multiply that by 200 million cars across America. What happens is it reduces your discretionary income. If you're paying another $30 at the pump twice a week, then you're not going to go out to dinner Friday night. You're not going to, take a vacation, whatever it may be. So that depresses all those other areas. So there is this recursive function. So don't rule out deflation down the road. Not right away, but maybe next year. So cash. But here's the biggest value of cash. It gives you optionality. People don't understand this. What if I said to you, hey, I'll sell you a call option, an at the market call option on every asset class in the world? You go, gee, that sounds kind of valuable. Well, that's what cash is. When things are crashing, you're the one who can go shopping. And nobody's better at this than Warren Buffett. He's got his cash level at Berkshire Hathaway is at an all-time high. So there's a place for that. You can have some stocks, but I would look at the energy sector. I mean, I actually built and I own the largest non-commercial solar module field in New England. And I run my house off it. It produces about 7.5 kilowatt hours. So I know a little bit about it. And what I know is it doesn't work at night. It doesn't work in snow. It doesn't work in rain. It doesn't work in really cloudy days. By the way, you don't run your house off of solar modules. You run your house off of batteries.
Yeah.
And the modules charge the battery. So you watch the battery level. That's how you manage it. So it works fine. But if you think you can run cities with that, forget it.